So let's talk about what we actually wanted to come here and talk about, and that's investing. Now, right now, Jeff has done we all work with investors here. Jeff works with some unique investors doing different infill deals and has done some other stuff. So, Jeff, investors that are looking right now, maybe looking commercial or anything, what are they actually looking at?
Well, I think that's maybe I'll kind of frame the question a little bit differently. Sure. I'm working with some clients in the multifamily space, so doing some research. Maybe I'll start with the infill. What you talked about there is I was starting to get a.
Why don't you before you do that, explain what infill is in case
okay, infill is the development of the inside of the city, or more accurately, the redevelopment of the city. If you're from Austin or you're not from Austin, there's a lot of properties where you'll see a house be torn down, and then you'll see two houses built on there, or a duplex developed on there. And they're usually urban, more expensive properties. Or you'll see a corner torn down, and you'll see condos go up, or apartments. So infill is essentially the redevelopment of the inner core of the city. And so in that particular space, last June, the builders knew that they were in trouble. They were trying to finish their projects, and the new construction more or less just halted. And then the next thing that happened is people stopped buying development lots and starting new construction projects. So I had a client as an example with a lot that had comps at $1 million in Crestview, where now that property's worth maybe $750, right? Yeah. And builders, even if it was a good deal, weren't buying these lots because it was too risky to start a new project before they sold their existing project. And we're still going through that process. So we have a real lack of people buying the older homes that need rehab. Most of them have been rentals. Some of them are estates. Some of them are people that are moving into assisted care, moving in with family. But these are homes, the big areas in the center of the city are going to be, Crestview, Brentwood, 78704, parts of 78745, East Austin. And so that market just stopped. And with the rates going up and the taxes on those properties being really high, investors stopped buying those to hold as rentals for future infill development plays. So that market just went away. So that was real tricky. But what I saw was investors buying a lot of land right on the edges of the city. So if you think of outside the infill areas, just right along 183, Del Valley, Caldwell County, Dale, Texas, Jarrell, Hutto, raw land was just trading like crazy, and prices were really escalating, and they still are. So with this multifamily client looking through the opportunity in multifamily, you can imagine all of these spots that would be the logical place for the next single family residential development to be are all being developed into or approved. I looked just in the last 3 months, 16 multifamily projects were approved by the city of Austin to be built. And these are all like surrounding the city. I looked for this particular client, what projects are on post bid, meaning they're going to be delivered in the next 12 to 18 months. There was $7.8 billion worth of multifamily between Austin and San Antonio that was going to be built. And that doesn't, so it's so the reason why that's important to call it your everyday investor is that now the next logical ring for a single family residential community are all being developed by multifamily. So right. Where are the next single family homes going to be that are close to the city? In the inside of the city, there's no new construction. So What's going to be left? The resale houses. So I believe what you're going to see in 2025 is a severe shortage of urban new construction and a shortage of lots to develop new construction. So an escalation of homes right there in the urban core. Then you're also going to see on the outside of the city, areas like Dale and Caldwell County, Jarrell, Elgin, Giddings, Hutto, those areas just exploding because those are going to be the only places where you're going to be able to develop new homes that are in the affordable range.
And what that means, if I'm hearing you correctly, is that if you're an investor looking at buying and holding closer to town means that we're not going to see, while people are thinking about crashing, right? If you're looking at that, you're going to see more towards the center of Austin continue to see healthy prices because all of the building is on the periphery.
Right. So inside the city, eventually I think we're going to see a little bit of relief on the interest rates, but not a lot. So an investor, the typical investor you get from out of state, I want to buy this property, this fourplex, this duplex, but I want it to cash flow. If you did the pure exercise, it was about 40% to 45% down when interest rates were low to buy that deal. Well, now they're going to need to put at least that amount of equity in, and then put a good cash reserve to wait 2 to 3 years for that property to cash flow. But where I think the real magic is if you're buying a lot that has the potential for redevelopment, you have multiple exit strategies. You hold it as a rental, or maybe you turn that property into a new build, or sell it to a developer that does a new build.
Yeah.
But the short story is within the city, the prices will go up because there's going to be a shortage of housing, and the housing that's going to be built is going to be in the periphery. The affordable houses, I think are going to be on the east side, and neighborhoods that are going to replace, where somebody would have gone to Circle C, they're going to go out to Dripping Springs, they're going to go to Belterra, they're going to be out in Bee Caves. On the north side, they're going to be out in Liberty Hill. We're already seeing the start of that. And anybody who needs to be or wants to be close to the city, the prices have nowhere to go but up. But it's going to take about a year for that to happen, or to start.
One thing that I have a question about, though, is you're talking, so over the last, few months, there's a lot of reports about how Austin is like the number one for multifamily, that's building the most units multifamily. And that's true. I mean, you stated the facts right there. One thing that's in this kind of lack of better words, shitstorm with the banks and commercial lending is that the fact that with a lot of these developers are building these projects, right? So they go through, they get their construction loan. At the end of the construction loan, they got to refi out of that construction loan, right?
Right.
So they get to that end of that construction loan. If rates don't come down in the next really couple months, you're going to see a lot of these projects that are going to run into issues because they're going to have to refi out, and those rates might not be affordable. What are your thoughts on that?
Well, I think the banks are going to work with them. They're going to do workouts. They're going to do interest-only loans. They're going to do whatever they can to not put the developer into default. Now, you consider that any one of these loans, there's always going to be somebody that comes in and kisses the note, right? And that guy is going to be, probably a family history of building multifamily that extends generations, really deep pockets. And most of these developers are pretty big companies. So they're going to find a way to work out the loans with the bank. The banks aren't going to, I don't think the banks are going to collapse those deals right at the time when they need to put them in a place where they can start earning the income that they planned on.
Right.
I could be wrong there. I think there is going to be a developer, probably call one, that's building, under 100 units that may have graduated from infill projects and is now trying to build something bigger, that finds that they're a little bit over their head. They don't have the depth of experience with the banks to be able to be fronted, 30, 40, 50 million on a project. But, that's just a little bit of speculation of what the bank would do. I just don't see banks calling notes on the multifamily project. I just don't see that happening.
Thanks for watching this short of the Real Amigos podcast. For more live streams, hit here. For more clips, hit here. We'll catch you on the next one.